Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Still within that trading range in the S&P, so that'll be kind of our lead topic of the morning. We also have, of course, I'm sure you all watched that Facebook testimony yesterday and the ridiculousness of that. Maybe we'll talk about that, but we have other things we want to get to. Fastenal earnings. We had some ratings changes to Netflix and to eBay. Noticed yesterday that Etsy has been on a tear. I want to talk about that as well. And our guest today, Tchir, who will join us at 8:35. He is the head of macro strategy at Academy Securities. Joel, what is doing this morning in the S&P? Still in that range?
We're still in the range, trading in the red by 22 handles. Your opening tick of 54.50 was 2 ticks below the close. We nicked that close at 55 even. Little Trump tweetage. We got down to 26 even on the rebound here. Boy, tough to find support here because Tuesday's low is way down at 26.12 and a quarter. We will keep an eye on 26.40. That's mid-range on the session. Crude on the verge of a major breakout here, up 76 cents at 66.27. 66.44 is your high. We are all keeping an eye on the high of the move at 66.55. Gold, a little flight to quality here, up 650 at 1352.40. We'll discuss with Dennis whether or not we should take some long-term positions in the gold market. Silver not reacting as well, flat here at 16.59. Let's bring Dennis in here to recap the after hours and pre-market action and trading range Hanover. Dennis, once again, got to that top of that trading
Still
range.
in there.
Yeah.
And everybody bullish yesterday, but again, we kept reiterating this 265, 266 area remains resistance. So keep playing it. The range has been I'm going to keep saying it because it's been working every show. 257 to 265, 266. That's been the range. 257, 258 on the buy side. 265, 266 on the sell side. If you were selling yesterday's rally, you got up to 266.04, right on the kiss of the number we're talking about. And boom, you're down three points on the SPY from those highs. 262.84 overnight. We've been as low as what? 262, Joel. So you're talking like these are 30. These are huge moves. These are 30, 40 point swings you can capture in here right now. We're talking 1-2% all the time. So until we break out over 266 or break down below 255, 257, it's hard to get bearish or bullish. You just got to play the range.
Do you think earnings? I mean, I talked to Nick, and he's kind of hoping, if the headlines would just calm down and we could just get to earnings season. We have a good earnings season, but now with these headlines and everything, I mean, I just don't know how much earnings season's even going to matter with the threat of war and the Trump tweetage going on. You think we'll get back to following the fundamentals of the market, or it's
going to matter? But right now you're right. The overall headlines of the markets, of the macro picture, of the political picture is what is leading the stock. So that will obviously cause sentiment to be good or bad on any specific day. I've been saying it all along. You don't want to report earnings on a big down day because they will find a reason to sell the stocks. If it's a huge up day, those are the days you want to be reporting earnings. Obviously, the companies can't, change their earnings dates to try to go along with the market, but that's the way it works. It seems like the overall macro picture is driving individual stocks, even on earnings reports here. Fastenal down significantly. I haven't even looked at the report, but I would have gathered even if they beat today, that the stock would be down just because the market's getting hit and they don't want to own stocks today. So it's a really finicky market where, even if you've got good news, sometimes that's just shrugged off for the overall picture. Stocks are all moving around together. I mean, we remember when we were looking there on the Friday tape, and I think I tweeted it out, and it was like literally like of the 500 S&P stocks, 495 were in the red on Friday. Like usually in normal markets, even when you get a down day, you'll see some defensive stocks trading up, maybe some Philip Morris, people smoking more because they're way down in their stocks or whatever. But, you weren't even seeing that. It was a stock is a stock and you sell stocks, or a stock is a stock and you buy stocks. And everything right now, for the most part, is moving together. You still got to respect the beta. It's like, obviously Coke isn't going to move as much down as, you know, an Nvidia or something like that. But that being said, all stocks are just moving together right now, just waiting for the next Trump headline or waiting for the next, you know, headline over the whole political macro picture.
All right, let's talk crude a little bit here, Dennis. I don't believe it was today's Wednesday, Monday night. Saudis come out and say they're gunning for $80 oil. Turmoil in the Mideast here. I mean, I guess you got to respect this resistance in the crude market. As I mentioned, 66.55 has been the high of the move, and I think that is the highest that we've traded in the crude market since October of 2015 here. Can you get on the train here for a breakout in crude? What would it?
I've been on the train, and I'll tell you, that's something that I've been accumulating. I've talked about that in my portfolio. I've been buying a lot of, ETFs that have, oil stocks in them because they're cheap. And we know I bought ExxonMobil before. I bought that at 75. I'm finally starting to break out here now. It's starting to look good. I like the crude stocks. A lot of them have come back a long ways. Obviously USO is knocking its head up against a major resistance point. If you're just looking at the USO itself, this 1330 area has been the Rock of Gibraltar. You're trying to break through that this morning. I mean, here we are, a big down day. Crude is trading up here on this big down day. So crude looks good to me. I mean, it was a little bit scary there a couple days ago, but immediately that's that's what rebounds the most here when the markets start to turn. Crude looks good to me.
Can you give a couple of those ETFs that I wish I would have taken note of?
Well, I'm buying in Canada too. So, for our Canadian listeners there, the one that I always buy, and I won't be able to bring up a chart of this here, but I always buy this XEG, I think it is, on the Toronto Stock Exchange. So XEG is basically all your biggest Canadian oil companies. Suncor Canadian Natural Resources are huge components in there, but it's got a little 1.66% dividend. The reason I buy that is I have Canadian money. So you've got to find, if I was in the US, I'd be looking at the XLE. So that's, the difference. I do buy US stocks too, but the one thing is I always say is Canada has a lot of oil stocks. Why, as a Canadian, am I going to go pick on, really go into the US markets besides ExxonMobil, because it's just, I think best of breed. There's lots of good Canadian oil stocks as well. The one thing Canada has is oil stocks. So I always struggle as a Canadian investor to find stuff to invest in besides oil, because it seems like everything that's stock in Canada is related to oil or is an oil stock. It's something like 30% of our exports, or I don't know if those numbers are accurate, but it's a huge component. I mean, Canada, the Canadian dollar trades off of oil, obviously, as well. I mean, we're a Canadian oil-based economy. So I can find lots of good Canadian oil stocks in Canada. XLE buys a whole bunch of them for me, or XEG.
No, that's
so if you're American, you probably buy an XLE though, and that's a good one too. And that looks like it's breaking out as well. So let's talk about the XLE. It's trading down here in the pre-market. I don't know if it stays down. I think this is one actually in the pre-market. I've been nibbling my toe into it here as well. I think this could be one that if the market does turn today, that XLE takes us higher.
And breaking out of a long base here, the February low held up very well, and now you're trading. You hit 69.35 on February 26. You got above that yesterday, so old resistance, perhaps new support. XLE, that chart looks good. And just want to mention, does you doing anything with your Canadian dollars here? Maybe selling some U.S. dollars and buying Canadian dollars. That chart, we've talked about it before, how the Canadian dollar follows oil, and boy, oh boy, you've had a nice run here in this Canadian dollar.
Yeah, and that's just it. It does follow oil. There's other impact. There's interest rates is obviously always your biggest influence on a currency. We're not currency traders on here, so we won't jump into it all. But okay. Oil is the one thing Canadian dollars do follow too as well. So when oil is starting to get strong, obviously Canadian dollars are going to get strong. And if you look in the last month, it's what you saw. Canadian dollar is strengthened about 3-4% here in the last month. And it's not coincidental that oil has taken off here in the last month as well. So really, that's what it's following to a certain extent. Now, interest rate concerns are obviously the case in Canada as well, because the Canadian has a huge housing bubble, and they can't raise interest rates not nearly as much as maybe they can in the U.S. So if interest rates go up relative in the U.S. to Canada, that puts pressure on the Canadian dollar, because we know people chase yield. So if you got a higher yield over in the States, money will obviously convert to U.S. to chase that higher yield. So that's the economics behind it. But Canadian dollar is influenced by oil tremendously as well. So when you see oil strong, often you will see the Canadian dollar strong as well.
All right, then just before we get into individual stocks here, you and I have been talking a lot about gold, and is it finally time? Here we are in the midst of a 4-day win streak in gold. I don't know. I mean, is this finally the time that we clear 1350 and for good? I think what I'll be looking for over the next couple of sessions here, you can see we've snuck over 1350 maybe a half a dozen times here since late January, but we never really were able to like make it a low, to make it support, to make it a couple closes. So that's what I'll be looking for in gold. I mean, with this international turmoil, you have a flight to quality in gold, also crude, inflation expectations here. But interesting chart here. And what are we looking at in the June gold for our gold bugs out there?
You know something, and this is just another point, just back to Canada again, because obviously gold is a big, there's lots of good Canadian gold companies as well. It's a resource-based economy. But you know what is interesting? When you look at the charts, and this is one thing to consider as a Canadian investor, and you look at what the Canadian markets have done relative to the US, the Canadian markets have tremendously underperformed the US counterparts in the last 5 years. I mean, if you look at the XIU, which is a good indicator in Canada of, what Canadian stocks are doing, back in 2011, it was $19. Today, it is 22. So basically in the last 7 years, on your TSX 60, which is like your top 60 components in your Toronto Stock Exchange, you're up basically a little over 15% in the last 7 years. Now, if we look at the S&P in that same time period, we went from 125 to 260. So basically, U.S. stocks have doubled, and Canadian stocks are only up 10 or 15% in the same time period. That is incredible. Obviously, oil has a lot to do with that. But if you think, that, hey, if you're looking for markets that haven't went yet, and maybe, we're looking at this gold like it's going to go, maybe we're looking at this oil like it's going to go, maybe it's time to buy Canadian stocks. Thoughts? Laggard market.
Laggard. Well,
I like buying long term. I like buying the laggards. You know me, value guy.
Okay, well, the Warren Buffett of Canada here. Let's move on. And you mentioned the Fastenal earnings and a great long-term performers. What kind of numbers did we get out of them?
Well, they weren't bad, but they certainly weren't good either. They're right, just in line. They missed the EPS by a penny, 61 versus 62 cents, and the sales were in line at $1.19 billion.
Okay, so what's guidance? Did they give guidance?
Not that I saw.
Okay, I'm just going to go dig into the report a little bit here too. Sometimes they post it afterwards, but no matter what, and I've already said it here this morning, when you see the market down significantly here, you've got to blow it away on those days to really go higher, and that's not the case here. So not surprising if it misses, it's going to go down. If it misses, it's probably going to go down in an update too. So not surprising that Fastenal is trading in the red here. I'm just trying to look at the numbers here.
Go ahead. You look at the numbers and dig into those. 5202, that is your pre-market low. Some volume trading here. My significant level here, and it's only one number only, 5133. That was the low of the move in February. It's been tested a couple times. If short, coming into that level, definitely trying to cover a short the first time. If you feel like you want to try a long on the stock, that looks like a decent area. Been down there 3 times. Current low, not showing a lot of bounce off the 52015 low.
I still like this stock long term. So this is one that I always want to put in my investment portfolio. I wish I would have put it in there when it got back to 41, 42 bucks, and I didn't. And then it blasted off. I think it gets back into the 40s. I think you have value investors like myself looking at Fastenal here again too. It's 52.15. Problem is they might be coming in before that. I mean, you got lots of support like you're talking about, 51, 50, 52. So maybe the value investors are going to be a lot earlier than I am. 2.84% dividend as well. It's the nuts and bolts of the market, literally, because this is what fastens, this is what, you sell all the nuts and bolts to all your construction companies. So Fastenal, I do like it long term and as a, potential investment. I wish I'd be able to get it a little bit cheaper because it seems like it always somewhat comes back into the 40s for whatever reason. And then it's always a good buy in the 40s. If you look at the monthly, multiple times we've come down 41, 42 over the last 7-8 years. And every time it seems to get back up over 50. So it's kind of always been the play, buy it at 40, sell it at 51, 52. We're above that range here right now. So maybe this has been a long-term 7 or 8 year trend where we're going to eventually break out of here. But I'd love to get another shot down in the 41, 42 area. That's obviously not going to happen anytime soon.
I don't know if cousin Jimmy's listening out in Portland, but he's been in this stock, or his family's been in the stock since the early 70s. The story began in
Really?
Yeah, he's always told me to buy this one. It's one of the staples, and I see it go down after reports. I never got into it. Story began in 67 when this guy pulled together 30 grand with 4 friends and opened a 1,000 square foot shop in Minnesota. And look at it today. But nuts and bolts of the economy. That was really the only significant earnings report that I saw this morning. Dennis, was there anything that caught your eye?
No. And we're obviously going to start earnings season. We've been talking and previewing it to a certain extent with the banks on Friday. We're going to hear from JP Morgan and Citi, and that's going to be a big day for earnings there as earnings season kind of gets officially kicked off. We'll hear from Bed Bath & Beyond tonight, but I mean, that's reaching that they're in any influence at all. The banks is really what kicks off earnings season. But there's a lot of other stocks to talk about here. You know what? I'm just looking overall, though. I know we're down significantly here. And yes, we're in the middle of the trading range, so it's hard to make calls here. But I just don't see – I see a lot of stocks wanting to go higher here this morning. So, and, obviously, it's difficult to call this market when you're in the middle of a trading range here. But I don't think this is going to be one that's going to keep whooshing here today. I feel like we could come back. I feel like people, yesterday are like, man, why didn't I buy when we got down? I feel like this is buy the dippers. And I know I said this on, I think I said this on Friday morning when we were selling off and I was wrong. Obviously, the market got trumped, though. So that's the wild card. You get those headlines coming in and everything changes in a hurry. So, I don't know what's going to happen here, from a headline perspective here. I'm just telling you, mentality of this market, it's still in a trading range, but I feel like, just like I said with Facebook yesterday, I feel like eventually we're breaking out to the upside. So if you put a gun to my head, I said this on the show on Facebook when it was, 157 yesterday, and I'm like, it's kind of in the middle of the range, but if you put a gun to my head, I think it's going to break out to the upside. Obviously, it did that yesterday and took off. I feel like that's the same thing in the overall market. It's still within the trading range. I'm still respecting it. I still think it's a 258 to 266 play until proven innocent and we break out. But if you put a gun to my head, which way are we eventually going? I think we're breaking out.
And today, and I was thinking about last night when I was doing the levels, and today what I want to talk about on the show was it's a really important technical day in the market, because I've been talking about the volatility, coming in a little bit, forming a base here. We built a base above the February low, then we put another layer above that as support, just under 2,600. Now, if we could just build that other level of support here, 2626 or 2630, just build another base, then I agree. Some good earnings, starting with the banks here could take us over the top. So, and you're right. You mentioned, Trump kind of threw a monkey wrench into it, but I know I'm still feeling that way too, that we're building a base here, and I wouldn't be surprised to see us, I don't know, maybe go unchanged. I mean, that'd be a 20-point rally, but the way this thing moves, I mean, that could happen by the end of the first 15, 20-minute bracket.
Well, look at FANG, for instance. Facebook, we know, got back and broke out of its range yesterday because Zuckerberg did a pretty good job. Maybe we can talk about that in a minute. But,
Sure.
Get an Amazon. It's kind of just sitting there looking like it's itchy to break out to the upside again. Netflix is gone. I mean, Netflix is breaking out over $300 again. Goldman, putting a 360 price target on it. And we'll go to that in just 1 second. And then
Sure.
Google is kind of just hanging out here too. But I don't know, man. I think, FANG could lead us out of here too. What are your thoughts? So go to Netflix because that's been the best one. I mean, it's come right back. And, if you threw Tesla in the mix, I mean, nothing's come back more than Tesla, which was hated a week and a half ago and seems to be loved now. Thoughts here, let's go to Netflix because it's trading up in the pre-market. Obviously, one of your sources of strength here this morning with the 360 price target from Goldman. Thoughts on NFLX?
A breakout here. A major breakout in and of itself, even with the SPOOs down 20, great relative strength here. I can't feel my Facebook. He's been playing this from the long side ahead of earnings. And he said, Dennis, I heard you say respect the beta. He wants to know if you agree that Netflix is not trading with the market today. Beta is under 1, but it's up on volume. You got to attribute that to Goldman Sachs.
Oh, it's all Goldman.
It's all Goldman. And you got to break out above 300 here. You're not going to make a lot of money shorting, calling Goldman Sachs, at least short term. I like this. And also, like, do you want to be short going into earnings here? I mean, it got lefted, right? And Citron, and that brought it down, and he covered his short. And now you're really talking about a vacuum area here. You had on the 27th, you had a close at 300.69. The high that day was 322.90. So I don't want to say it's going to 322.90 today, but you got a clean breakout here over 300 with the Goldman upgrade.
Sure, and it's not an upgrade; it's just a price
change.
Raise,
I'm sorry.
But still, 360, it's a big price target there, so everybody's taking note. And we know Goldman has some of the most influence on the street, if not the most influential broker on the street. There's other news here too. I don't know if you want to jump into ratings here, but there's a few of note here. eBay is catching an upgrade at KeyBank. It is trading slightly in the green here. I mean, it's a tough day to get upgraded because the market's really weak. Mattel, this one's interesting, getting upgraded.
Yeah,
I can't read my writing again. I think it's Jeffries.
Yeah,
I literally chicken scratch. It's like a doctor. I'm trying to read this. Is it Jeffries, Spencer? Because
it is.
I'm like, I think I can kind of make out a J. It's a bunch of squiggles and kind of an S at the end. So I'm thinking that's what it is.
Did you dot the I?
No, I dot the I. No, I'm too lazy to dot I's. Mine's getting worse and worse and worse. It's just chicken scratch now. But, and I have this sheet, I can show you here. Here's my little sheet of notes here from last night, this morning. You want to see it? I got all my stock secrets on here.
Let's see.
There's no order.
Can you zoom in to see this?
It's not even in order. It's just like,
no, it's all over the place. Well, I have a method to the madness though. So here, I've got these are the stocks that are reporting pre-market. These are the couple stocks that had ex dividends, so ACN's on there. I have here who's reporting tonight. So I always do tonight stuff here. This morning stuff is here.
You don't have it up, Spencer.
And dividends are over here. And then I have all kinds of stuff that's happened. Usually ratings come in the middle here. Facebook's right at the top. Look, FB got the love because of Zuckerberg. And then I got ALOG with the take under, which we haven't talked about yet. The crude potential breakout. Yeah, so it's kind of there. Chicken scratch.
Oh boy.
Okay. I know. There it is. Spencer's getting it up there a little bit late. But yeah, I mean, it's who's the guy? And there's someone in the chat. They tweeted at us a couple of weeks ago. Their notebook from the pre-market prep show, taking notes every day. I can't remember who that was. I think it was Tom.
Listener. One of our listeners reached out and he says he takes a whole bunch of notes of our show every day and he's been doing really well taking all the notes. So I don't remember who that was either, but nice job if it's working for you. That's the whole idea. When Joel and I started the show way back in 2012, and obviously Spencer came in, I believe. How long you been here, Spencer? You've been here a couple years now too, eh?
How long does it seem like I've been here? Is the question. No,
I don't know if there's a correct answer to that question.
No, 2015.
2015. So, and Joe and I started 2012, and then we joined Benzinga, 2013?
13, yeah.
When we came over here?
Yep.
And then we had Brianna for a while helping us out there for the long-term listeners. And then we got Spencer Israel here now. He does a great job behind the scenes. And obviously the whole Benzinga team behind the scenes does a great job with the show. But the point I was going to make was when we started this show, it was originally a Bright, call that I used to do with Cash Coin. And for the Bright traders listening out there, we used to just do a morning show where we help our traders a little bit. And then Joel and I were talking, and we could help out some other traders too. So all we were doing was just bouncing trading ideas and trying to start a little bit of community. I get great ideas off of our chat as well. So it's not just we're just giving out our ideas. A lot of great ideas come from our chat.
Oh,
I mean, you guys are great sympathy plays. We ask you questions. You guys find the answers quick. I mean, we've got a really great community. And if you're listening, on some of our other, areas, where you can join the chat is premarket.benzinga.com. They've got, the chat room there, which, we have some great listeners there as well. But that was the whole idea, just to bounce ideas off of each other and give out some of our ideas as well. So, we like to help other traders, and, if we can do that, that's the whole point of the show. So, if they can help us too in return, that's great.
Hey, Dennis, it's TT Mac that in the chat that takes the notes. He
nice, TT Mac. Hey, thanks, TT Mac.
That was
great
fun.
Stuff.
That was a fun tweet. Okay, there was another digression that Spencer was supposed to keep us on track here, but that's okay. So let's move on. Let's move on.
Oh, wait, we didn't finish. We got
Facebook.
No, Mattel.
That's right.
We were on Mattel.
How the hell did we get talking about this?
Look at this chart. This is your kind of chart. A little cup and handle going, itching to go. Huge support at $13. Hey, don't call now, but Mattel's ready to make a comeback here in this chart. What do you think?
I think the most you can lose is $13.73.
You don't like Mattel.
No, I mean,
I don't love Mattel either long term, but short term the chart looks okay, doesn't it?
If you keep buying toys for your kid at garage sales, I don't know how.
Oh, they don't make any money from me.
Okay.
I'm on the recycled toy like program there. When I get up to my cottage, we go, me and the boy is funny. So we go up to the yard sales. We do it when I'm up in my cottage every Saturday morning. And the boy will sit in the back seat. He's 3 years old. We do the drive-by shopping, and he'll be like, and look, he's like, glass. It's all glass. We don't like glass because it's all like glassware at that one on the table. So whenever he sees glassware, he's like, no, just toys and tools. We only want toys and tools. I want the tools. He wants the toys. So that's all we're looking for. Big plastic toys or tools. We see glass. He's like, no, glass. Yucky. We don't want glass.
Yeah, okay. Mattel doesn't look bad. It's trying to break out here. Jeffries is making a call. Let's see. I'm looking at the Hasbro chart. Mattel's been a serial underperformer to that. Looks like we're breaking out here. 1366 was yesterday's high. We're trading above that level right now. Being a cheapie, I'd like to see maybe if I could get it at the close of 1352. And if you're really going into a decline here, boy, someone's been stepping up at $13. Your lows between March 23rd and yesterday are right just hawking $13. So that's your major support if you want to give it a little bit more room. Bullish here, Cloudera. Let's just talk about that stock real quick. Dennis, you saved me on this one. Remember I said that you couldn't go wrong owning it at 1450 because that was a former all-time low. Remember that? That was on April 4th.
You said that.
I said you saved me because I said it.
Saved you.
And you scolded me. And
I scolded you and saying stocks making new all-time lows. I don't want it. I always had this rule. When a stock is making a new all-time low, you got to go. Means you don't want to own the thing. When stocks make new lows, they beget newer lows. And that's why I'm never a fan of a stock. And that went from the all-time highs to all-time lows in one day. I remember that. And you were saying, well, it's got to bounce here around 15 bucks.
I guarantee
it. Got to do anything. $12 here now, Cloudera. So it's still going down. It's at 5 straight down days, I think, since then. So, or 5 at least red candles in there. So hasn't stopped going down yet. So no reason to get interested in this, at least until it has a green candle.
I could get bullish here. This is coming out of the YouTube chat. Bullish. There's only one thing I can say about this stock that is bullish, and that is the old term seller's exhaustion. I mean, you had 28 million trade when it went from 22.24 to 13.29. And then you did have that minor up day on 8.5. But the volume is really starting to dissipate here. So not that there's going to be aggressive, buyers, or I recommended this on the buy side, but maybe sellers are getting a little bit tired. That's the volume's out. Everyone that's out wants out. People don't want to short it down here quite yet. Double bottom to lean on here at 1257, 1272. So the only positive thing I can say about this stock is, maybe the sellers might take a day off or two, but long term, not looking too good.
Yeah, I don't know, Cloudera. I don't know anything about it, and the chart's still going straight down. So it means I'm out for now. eBay caught an upgrade. We talked that one. Citigroup caught an upgrade. HSBC, that's not going to matter that much because obviously market is getting slaughtered here.
eBay looks interesting. Let's do eBay real quick. Trading up 16 cents. It found support here. 39 even was 38.90, 39 even. 75 cents away from it now. But if you're looking for a swing trade, that's pretty good support. On the upside, you're trading up. I'd look at your 4-day high. Well, you got a couple targets. Your 3-day high at 33. 39.94 and your 4-day high 40.31. Short-term targets here if you're looking to capitalize on this upgrade in eBay.
Let's jump over to the take under of the day. Ooh. Yes, I said that correctly. Take under. ALOG closes at 96.05. Gets taken over for $84. Shareholders probably not too pleased, at least the ones that were speculating that we were going to have a significantly higher takeout price than we got, which is not the case. So the reasoning here is that they said that when the talks in June started, the stock was at 67 bucks. We know it popped in March on more rumors there, and it got up to $101 on, that they might get, a takeout price here. It's been trading up at 96, waiting for, if we're going to get a good price here, and the price is not good, and shareholders getting punished who were speculating that this price was going to go higher because it actually gets taken out for $12 less than where it closed. Not every day you see that one. ALOG trading at 83.50, 50 cents below the takeout price.
And just a general rule of thumb here. A lot of times, the days that deals are announced, you get pops in stocks, and sometimes that's the absolute high. You got this rumor back on March 6th, you went to 101.80, and you leaked bad to close at 93.90. Never really even recovered that level. So, I haven't had that many stocks that have been taken over, have had the choice, to sell them, but sometimes that first day the juice that's out there, people chasing it. I don't know what you do now. I mean, yeah, if you're stuck here, I mean, you're only looking at 25 cents on the bone here at 83.75. So takeout. What'd you say the takeout price was, Dennis?
84 bucks.
Wow.
So yeah, if you buy it here today at 83.75, you get 25 cents if the takeover goes over. It's not like it's like, discussions or this is a deal. They made a deal. 84. So I don't know if you're a shareholder that bought 96, you're just SOL, I guess.
CPI,
but you don't see that every day where stocks trade 96 and the market gets it so wrong, gets taken out at 84. So disappointing, obviously, if you were along this stock.
CPI unchanged, down 0.1%. Not really affecting the market here with all the headlines. We did. I just want to alert our traders that in that bump off the low, 35.75 has been the high of the recent move. So our levels so far, 26 even, your pre-market low. Ran into sellers at 35.75. That was on just on the last bracket here. Dennis, 2 minutes past the imbalances. I don't know, with tweets and the spoos down, are you getting some selling balances there?
They're all small here yet. I think, there's just so much volatility that institutions aren't showing their hand an hour before the open there. So you see a small seller balance across the board in a lot of stocks, but there's nothing really jumping out to me like, whoa, check this one out. I can't even really give you anything of note. I see Square's 53,000 to buy, but that's, so early here yet. Bank of America 64,000 to buy. That's probably going to go to sell. I mean, the stock's trading down 30 cents in the pre-market. These are so small that they're just not influential. So it's kind of like a non-event, at least right now.
The second request here for Hilton, who priced an offering by affiliate of HNA at $73 a share yesterday. HLT. I like Hilton Hotels. Don't like the offering at 73. And the stock's trading at 77. So, Dennis, have you?
Is that right?
Hilton, this is it.
Let's check out. It's got to be more details on something.
Sure.
It's trading up $2. Hilton, yeah, 60 million shares priced at 73. Stock's at 77. Man, this is funny. I'm just trying to see if there's something else happening here. I just see the secondary there too.
They're handing
was
out
there
money.
Was there any other info? Like, was there an update or something? Chat, help us out here if there's something else on Hilton, because I'm not seeing that much jump out at me here either. But it's trading up $2 pre-market.
Offering expected to close April 13th. Yada yada yada.
I mean, it's trading active up here. It's traded 4 million shares at 77. It's got to be something else happening, no?
Not offering shares of common stock in the offering. No, nothing that jumps off the page.
I'm just trying.
Man, I would have done the offering when this thing was traded like 85, 86.
Oh, is there a buyback? Somebody just mentioned there's a buyback. I haven't verified that. They must have said something. I'm just trying to dig through here too and see if there's something. Chad, help me out here too, because we're live on the air and I can't really figure out what the reason here is. Somebody mentioned that there was a buyback, but I don't know why you do a secondary and a buyback. It doesn't make much sense to me either.
No.
Anyways, incredible movement here. And this thing is trading actively here. Like, it's 76.99 to 77. It's like a 1 cent market in this thing, trading that active. So I have no idea what's going on in Hilton.
All right, 77. trading actively there. 77.12 is the high of the move. This thing had been getting slaughtered, and now you are clearing the double top at well, no, there's no double. Well, 79.50. If you're looking for a target, call it a triple top. You had three highs between 79.29 and 79.49. The longer it takes to get there, the more I expect it to leak. But do some digging on the news. JV Spec is coming in here.
Well, it's 8:35. So
8:35?
we'll hit that after we go to our guest. Peter Tchir, head of macro strategy at Academy Securities. We'll be right back.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, and working the boards is Spencer Israel. We are joined on the line by Peter Tchir. He's head of macro strategy at Academy Securities. Peter, how you doing on this Wednesday morning?
Very good. Probably a little bit, frustrated like a lot of people at this market where it keeps, switching direction, almost unilaterally.
So there's a lot of different things going on in the market, and a headline-driven market, primarily stuff coming out of the White House, investigations. Syria is now on the radar. China. I don't know if there's any other countries that we can get in a tangle with here, but when it gets like this, and you're managing money long term here for people. I mean, how do you filter through all this, and what do you focus on?
I think we want to focus on kind of the bigger issues. And to me, the biggest issue still really is China and trade. And I think it's really beyond just trade. It's really about the intellectual property, right? China has come out with China 2025, where they're really shifting away from being kind of a low-end, low-quality goods producer to ultimately they want to compete with us. And I think that is really at the heart of why we're fighting with China right now. It's not so much about tariffs, so that's a part of it. It's really about ensuring our intellectual property rights, that we have reciprocal trade agreements going forward. And that's what I think we have to keep focused on longer term. And I think that's a long way from being done.
All right. So we have, an interesting technical situation. Those fab lows, which were once it was in the overnight session, then we tested it during a regular session here. Buyers stepped up over the last couple of weeks at just under 2,600. I mean, for me, the ideal scenario here, heading into earnings season, would be put in another layer of lows here. Let's say today's lows hold up 26, put a couple lows in this area, at least get to Friday. Cause at least Friday, we're going to start to get some macros. We're going to start to get some fundamental information on companies. So how do you characterize, the technicals in the market? And do you have any particular levels you're leading on?
Yeah, I think I'm looking actually to go back to, say 25.30, which was kind of the lows we saw in February.
Yep.
I would like to actually break through those and get one more kind of a little bit of a flush where we kind of can buy the index, sub 2,500, and then kind of set up for next week. I think people have been kind of a little bit ahead of earnings in terms of buying stocks, a little bit ahead of, the alleged stock buybacks that should be coming once we're done some of the blackout periods. So I think we need a little bit more shakeout. That's where I'll be comfortable buying, I think.
Just quick, I know you follow a lot of stocks, but someone out of the chat here is asking about U.S. Steel. We're short term and long term. Now, it's supposed to be the beneficiary of the trade war with China. Had a nice bump after that, but it began to leak. Do you have any opinions on U.S. Steel long term?
Not on that particular company, but I do think we have to be very careful when we're looking at these tariffs and how they're behaving, that the knee-jerk reaction isn't always going to be right. But I do think anything that's going to be a very, domestic production should benefit. I think Trump is dead serious about trying to rebuild, our manufacturing base. So I think things like that play should do well longer term.
And, investing, in the United States, also investing in other places such as Europe. Chartered Deutsche Bank doesn't look too good. You think that maybe this is a period here, maybe next 6 months to a year, that the overseas markets might be a better place to put your money and, based on some relative performance?
Yeah, I actually like Europe. I think Europe has actually had a lot of short interest developing. People kind of want to be short Europe. And if you look at it, really, when we start where the problem areas of the world, it's right now, it's us versus, Asia to some degree. I think Europe's going to be a bit of a beneficiary. I look at places like Deutsche Bank, not maybe them in particular, but European banks continue to have all this time to rebuild their balance sheets. Yes, they're going to lose some ECB support, but I think people have been too pessimistic on Europe of late. And I think we're going to see like another surge there. And money will kind of come out of the U.S. given all the uncertainty here, and some of it will find its way into Europe. So I actually like that performance right now.
All right. Also, another overhang in the market is rising interest rates here. Will the Fed go, another couple times? Are we going to get a total of 4 hikes this year? Historically, the market has been able to, to climb during higher interest rates, still relatively, low when you look at the history of them. What do you think the Fed has in mind for us, and how's that affecting your investment decisions?
Right now, I think the Fed is more aggressive than I think they should be. I think, they're kind of on pace for 2 to 3 hikes. I definitely believe and understand that Powell really doesn't want the Bernanke put or the Greenspan put to exist the same way it did. So I think he is going to be less sensitive to stock market gyrations, and he's going to continue on his path. Personally, I think we should be more a 1 or 2 hike environment, partly because right now the Federal Reserve is reducing its balance sheet by $30 billion a month. That will jump up to as much as $50 billion a month starting in September. The ECB might actually stop their purchases. So I think we should focus on dealing with this balance sheet reduction and the lack of QE, and maybe be a little bit cautious before hiking rates further. And there are signs, auto sales have been slow. Things that rely on financing have been slowing down. So we want to see, hey, has there been an impact by all these rate hikes? Is it actually hurting real people, the real economy? Is it becoming a tax on the middle class effectively?
Okay, let's move on here to the leadership in the market, which has been pretty narrow. If you look at the FANG stocks and a lot of technology stocks, is it there's always sector rotation and shift. Is it time maybe to take a little bit off the table in this high beta tech and maybe look at some other sectors? If so, what sectors are you looking at?
Yeah, I think we want to do a little bit of rotation over that. I think, these are great companies, phenomenal companies, but some are still up 40% already from October highs where they already seem to be fairly elevated. So I think in this market, the one thing we always have to be trying to do from a macro perspective is figuring out what next big rotation is going to occur and try and be a little bit ahead of that. And I think you are going to see a little bit of rotation out of tech. I like things, again, that will benefit from a slightly more protective U.S. Whether we believe that it should be protective or not, separate from the point, that seems to be the direction we're headed. So, domestic energy production, domestic material production, MLPs are an area that have been beat down very, very hard. Maybe that comes back. So I look for a more domestic, smaller company focus who benefits greatly from the tax cuts and maybe pull away from some of the big high flyers that have had phenomenal gains, both in terms of percentage, but also market cap.
Let's just talk commodities here a little bit. Very important to the path of interest rates here. Crude, boy, got within 11 cents of our highest level since late 2015. 66.55 was that level. We've hit 66.44, and now we're leaking. Obviously, the news from the Saudis on Monday night here. Is it time to take some chips off the table here up in the 66 handle in crude, or are we finally? Go ahead. Give us your take on crude.
I actually like crude still. I think we've got a bit more room for, upside, maybe towards 80 by the end of, maybe early next year.
Wow.
And part of that is, I think we are going to have to focus on domestic production, given everything that's going on in the Middle East, Syria. And we are starting to see bottlenecks. So if you think about 2 years ago, I think we had all these excess wells and rigs that people could really just turn back on. And it was really just a matter of turning the spigot back on. We're working our way through that pretty rapidly. And now you're getting back to this point where it's hard to find some, well-trained workers. So we might see a little bit of, inflationary pressure within that space, which will cause costs to rise and probably the price. So I'm still slightly bullish on the commodity space.
And so that would make you bullish gold here, trading up 1180 here. We've been flirting with 1350 here. I don't know on how many different occasions here. If you're bullish, the commodities markets is in turn make you bullish gold and or gold equities.
A little bit on gold, but to be honest, I found gold always a little bit,
Squirrely.
difficult in terms that there's the lovers or the haters. And now with what's going on with Bitcoin, it seems to fluctuate between it's a risk on, risk off trade versus it's a Bitcoin, non-Bitcoin trade. So I'm kind of neutral on gold. I just don't have a good sense of the technicals. If anything, I'd kind of be continuing to sell cryptocurrency, which probably means gold goes a little bit higher.
And you mentioned Bitcoin. I didn't. Boy, we've come down to the $6,500 level. Just it's gone. It's just no one talks about it anymore. Is the story over here in Bitcoin, or you think you can mount another comeback?
I think it's over for now. To me, I've always played this as a kind of rated adoption type play. So we saw all this hype kind of coming into October and November of last year. We're going to have futures. Okay, they came and really been a bit of a, dud. ETFs, I think, are a long way away from occurring given everything that's going on both in the Bitcoin space and the disaster that happened in the VIX ETFs with XIV blowing up. I think the chances of seeing a Bitcoin ETF is very, very low near term. So I think we kind of losing some of that, that new adoption quickly. So I think we pull back. I think we get below 5,000, and then I start looking at it. I also think this is going to be this time where we all have to evaluate if we're going to do cryptocurrency, which one do you really want to be in, and be very selective because some of the early adopters will probably not wind up being the ones successful, if any become successful.
All right, and just one more stock I want to ask you about, and we're probably one of the few shows on the stock that talks about this stock. What if someone came into your office and they wanted to put a ton of money into General Electric here, finding some support at the 1280 area? What would be your words of wisdom on General Electric?
I pulled up that chart yesterday again, just myself looking at what it was, $12 down from almost 30. We, the area I live in Connecticut, a lot of former employees there. I want to buy it. I'm not sure now is the right time, but that is one. It reminds me back of financial crisis where has it gotten too cheap? I think probably yes. So that's a name I'm certainly looking at. I don't do enough single stock specific analysis, but it is striking and hitting on my radar screen that how can this be so bad when everything else seems to be going so well? They don't have some of the financial issues they had in the past.
We've been on the line with Peter Tchir. He's head of macro strategy at Academy Securities, taking some time out from his busy morning to join us here on Benzinga's Pre-Market Prep. Peter, always a pleasure to talk macros with you. We'll get you on again soon.
Thanks a lot for having me.
All right.
Have a good day.
Okay. Thank you, Peter. S&P's moving up here. As I mentioned, 2635.75 has been the high of the rebound here since we made that 26.26 low. Crude is beginning to leak here. The fact that you didn't break out over that 66.55, some chips are coming off the table here, and gold continues to make new highs on the session, and silver's waking up a little bit, up 3 cents at 16.63. Dennis, did you enjoy that conversation with Peter?
Dennis on mute. Yes, I did. Peter's always good. We enjoy having him on the show. Yeah, crude leaking here. This has actually been up all morning here, but just starting to leak. So that is of note. You're starting to see some of the crude stocks roll over here as well. I still like it. I think, it's still been a source of strength here, and I think it's underperformed massively. I think the resistance point is still resistance until it's broken, though. So you got to look at the 1330 and say, holy cow, and USO, that's a Rock of Gibraltar level up there. Got to get through there to really, get going.
All right. Where are we going next here? Did we go over how Facebook traded during that testimony? Did we cover that at all?
We did not do that yet.
I'm not big one to trade like events like this, but to me, this kind of like it kind of lulled the bears into it, right? You've had the bad news, and everyone was waiting for Zuck to say something bad or whatever. And overall, he handled the interview pretty well. The stock showed a lot of strength yesterday. I don't know. Are we going to see that 150 level again?
No, I don't think so. I think you got buyers here on the pullback. All over the place here now. I think if this thing even gets to 160, I think you're going to find buyers here again. I know we're pulling back here. Are we out of the woods? Maybe not completely here, but I think you've seen the low. We bought them there 1, 2, 3, 4, like 4 times just above 150. We obviously took out the initial day there, but I know Carter Worth was on CNBC a couple nights ago saying he sees this thing going to 135. I don't see it. I think there's people backing up the truck, even like Nick Shaheen, saying, "Oh, Ray puts down there." I think the earnings are going to be a little bit disappointing, but I don't think it's going to be, as bad as some people maybe think it's going to be. So I think Facebook will bottoms in 150.
I would like to see this thing. If I get a shot before earnings here in the 157 handle, you had quad lows from 56.65 to 57.01. So similar how I talked about the market, making those February lows and then putting in, another base above that. That's kind of what Facebook did here. And that's $7 away. I don't know if I'm going to get a shot here at Facebook ahead of earnings. They report a little bit later into the season. So I don't know. Zuck handled it well and shorts recovering. The news was kind of, how much worse could the news have gotten? And I know a couple of the, the senators went at him pretty hard, but he looked a little uncomfortable in the suit, as opposed to the hoodie. But overall, he did a good job, and
he did a great job. Some of those questions that he was getting, the line of questioning was just absolutely ridiculous. Asking how many people have their data breached in a specific state. You had some comments there too, Spencer.
The best was Orrin Hatch. Asking if Facebook is free, how do you make money? Which is like the most inane comment. Half
the question.
What do you say to that?
Make any sense?
What do you say to that?
So, well, hey, how do you? What did he say? What was his response?
His answer was, "We run ads." But like, how do you not? You got to know that. If you're questioning the CEO of Facebook and you don't know how they make money, I don't even.
I just saw these guys senators. They just don't know technology. Is that what it is? They're so. I don't get it. Like literally half the questions was like, I was like, oh come on. Like it was, I either didn't make any, really relevance to, a lot of them just weren't relevant to the data breach. It is nonsense. So everybody wanted to say their piece, and a lot of people didn't know what the hell to ask, in my opinion. It was just bad television, really. I was on CNBC for 4 hours there, and after like 20 minutes, I was like, holy cow, I felt sorry for him up there. Obviously a lot of this stuff happened, but it's got to be, and he did a good job. He was answering. He was very professional. I think the market was maybe waiting for him to have to lose it or something on some of these lines of questioning, but it didn't happen. So he did a good job. The market applauded it.
Yeah, I wouldn't go as far as to say I felt sorry for him, but it was a little bit unnecessary in the line of questioning. But can we move on to can we look at Etsy? Because I was looking at Etsy yesterday at the chart of this thing. It's been on fire. It's been almost exactly 12. It's been like 50 weeks since they got a new CEO. May 3rd of last year was when they got a new CEO, and since then it has been a monster, a gem, you could say.
2016, this got down to $6. What a buying opportunity that was, because this thing is almost $30 here this morning. It was in a little base there, consolidating. It broke out from that base. So as it pulls back here now, I think you find buyers. This is the kind of stock that is going to lead us out of here. Now, long term, valuation is probably crazy on this, not going in the long-term portfolio. But as a trade, this is what you want to own. As long as this thing's above $27, the bulls are in complete control here. The candle yesterday shows you it wants to go. Obviously, market holding it down here this morning, but you know how I like my 2-day move. This one goes right on the radar for a 2-day move, and I think if the market does come back, this is one that's going to lead the charge. So I love the chart.
Yeah, not pulling back much at all.
Hardly at all.
No, 29. Big range yesterday. 28.05 was low. I don't think you're going to get a shot. Another thing you got to is very significant here is a big volume came into the stock yesterday, 5.6 million here. So either you had shorts throwing in the towel, or longs just doubling up. Last time you traded that much volume was back on March 9th. It traded 9.3 million. Added over $1 that day, and the rally continued. You did have some pullback, so big volume day in Etsy. Not a stock I'm particularly interested in. Macro news. I mean, Paul Ryan won't seek re-election. I don't know. Is he getting ready to take over or run again? Trump president? No. What's your?
I don't care.
You don't care.
I don't care. Don't care at all.
Spencer doesn't care, so I don't care either.
Is Trump getting back in? If they had the election like today, would he get back in?
I'll let the chat answer that one. I'm not going to touch.
I also don't care about that.
I think he get back in. And I know, we make fun of some of the stuff that comes out on the show, but there's a lot of people who really like Trump, and we're not a political show, so we won't, just get into the details. But personally, I think he's getting back in for a second term, unless something really crazy happens, which obviously can happen with Trump over the course of the next couple of years. There's a lot of people that really like him.
All right.
Can we get an imbalance update? Because you said there wasn't much at 8:30. Has anything changed?
Growing to the buy side, believe it or not.
Oh.
Some. I see Pfizer 149,000 to buy. I see ExxonMobil 81,000 to buy. That is of note. ExxonMobil is almost going green here. So obviously, we talked about crude being a source of strength here today. That is showing up in stocks like ExxonMobil and Chevron this morning. ConocoPhillips is in the green. COP has went to the green here now, just slightly. It has a small sell imbalance, but it's slightly in the green. Merck 50,000 to buy. We know Merck had that great day the other day, obviously, off of their Tchir drug news there. I played it, the Bristol Myers short offer, which worked well. Wish I would have actually played Merck going through that level, because we talked about the 56 and it blew through it. So now it's on a little bit of a breakout mode. Still own Merck in my investment portfolio. It's one of my biggest positions in my investment portfolio. General Electric 114,000 to sell. Ford 42,000 to buy. Ford still struggling around that level. We talked about the 1150. It did take it out yesterday slightly, but it's back down through it again.
Yeah,
so I don't know if anybody's going to reload at 1150, but that's just a big level still.
Yeah, they did. Got up to 1155, and the market didn't exactly help it out yesterday with the volatility. But let's see. See if the sellers reload. Did get too far though. They only pushed it to 1141. Trading down 8 cents in the pre-market. So once again, see if sellers reload at least the close 1145, yesterday's high 1155. We don't talk about lower price stocks much, but DC1 is bringing up fuel cell, and 1, 2, 3, 4
symbol.
Yeah,
FCEL.
Yeah, what was that? Man, what was that when that stock went crazy? Remember it went up over $50. Went to 56.88. What was?
I don't remember that, but I remember the $8 run.
What was the news on that? I'm trying to think. Was that
did this fuel cell FCEL went to $50? Are you sure?
Yeah.
Do you have that on the chart?
Yeah, March of 2014. And
I don't have that. I have $5 in March of 2014. Are you sure?
Yeah, traded. Help me out here.
FCEL.
FCEL.
$4.74 the high in March of 14. Did it do a reverse split?
No, I also see what Joel's seeing. So
yeah, they were traded 34 in October. Someone help me out.
No, this did some reverse split or something. It never traded those levels, I don't think. I think there's some type of reverse split or something happening, but I don't know for sure. I don't follow the story close there, but I don't think it did that. But anyways, the ones I used to trade a little bit of these things. Plug, PLUG was another crazy one. Plug Power, Ballard Power, Canadian one, BLDP, it's another crazy one. And they all kind of move together to a certain extent, and then fuel cell. So whenever I see one of them going, I automatically start to think about the other ones too. Remember Plug Power? It got up to like $11 and then got Citron back in 2014. Came out and basically said, look, this stock isn't worth, I think he put a 50-cent price target on it. Andrew left when it was $11. And he was pretty much right. It got to 83 cents there 3 years ago. So dog Andrew left all you want. Sometimes the guy's right.
It was all, replacing, new technology for, for automobiles, and obviously it never did, but you can look, it did get up to those levels. All right, final thoughts from me here. Intermediate number, the high since we made that 26 low, 35.75. Mid-range on the session is 26.40.50. Your pre-market low at 26 even. Let's see. I like to see the Bulls protect that this morning. Not much under that to 26.12 and a quarter, but I think we're going to calm down a little bit today, even though we had some fireworks in the after hours of pre-market. I'm looking for this. The 9-day range is starting to come in a little bit, so maybe the market's going to have a little bit quieter of a day. Dennis, your final thoughts?
Yeah, just thoughts here. TLT rallying big time here. What's that mean? It means your REITs are usually going to be stronger. It means your defensive yielding stuff is going to be stronger. It means your banks are going to be weaker. We are seeing that in the pre-market. Although I'm seeing some buy imbalances still kicking around some of those banks. Keep in mind, we're very early here yet. I would imagine your banks are going to be weak if that TLT stays that strong. So we know there's a big time negative correlation between the TLT and the bank. So watch your financials for continued weakness here if the TLT remains strong, and watch your defensive names, even your AT&T and Verizon, which had great days yesterday. Keep an eye on those for a little bit of comeback if this market obviously, is to turn around. It's going to be some of those stocks that could potentially lead the charge.
Yeah, Sprint woke up yesterday. Rumors of more talks with T-Mobile. Okay. All right, Spencer, at 9 o'clock, you want to wrap things up and preview Thursday show?
Jeff Hirsch will join us tomorrow. We tried to get him on last week. We're unable to, so Jeff Hirsch will hop on this show tomorrow. He is the author of the Stock Traders Almanac. If you want to listen to any part of our show from today, again, including our interview with Peter Tchir, you can do so on our podcast on iTunes, SoundCloud, and Stitcher, or youtube.com/BenzingaTV. Thanks to all of you who joined us in our chats today. Hope you all have had a good morning and have a good rest of your day. And we'll see you folks on Thursday. Have a good one.